Nightly Business Report. Produced in association with Reuters, the world's largest electronic publisher. Made possible by Digital Equipment Corporation, distributing high-performance transaction processing throughout your organization to let you manage rapid change. By Kidder Peabody, one of the world's leading investment firms, and GE Capital, providing business with comprehensive financing. Two companies of GE Financial Services. By A.G. Edwards, members of the New York Stock Exchange, serving individuals and businesses through more than 340 locations. A.G. Edwards, investment since 1887. And by contributors to public television.
Good evening, everyone. After no change in October, prices at the wholesale level moved up slightly last month, leading the producer price index to rise by 0.3%. The Labor Department says higher energy prices were the main factor behind the rise, but economist Charles Lieberman told New York correspondent Neil Cavuto that the number does not indicate the feared resurgence of inflation.
Well, the numbers were pretty decent in the sense that they continue the recent trend without showing any worsening in inflation.
So you're not worried about this, even with the increase, picking up any precipitous price increases?
There's no evidence of any worsening of inflation at the moment. There's every reason to think that inflation is going to pick up. We continue to see gains in capacity utilization. Domestic economy is doing rather well. GNP growth in the fourth quarter was probably fairly strong, but it really isn't having an impact on inflation quite yet.
Meanwhile, another economic report out today shows that the housing industry continued to build up steam last month as the construction of new homes rose 1.4% from October's levels. It was the third monthly increase in a row and brought new home construction to an annual rate of nearly 1.6 million units. But in a development that could slow the pace of home sales in future months, the Veterans Administration today raised its maximum rate for VA guaranteed mortgages by half point to 10.5%. The agency said it is taking the action because of a generally rising interest rates in the marketplace. And in the latest evidence of that, the Swiss National Bank today raised Switzerland's discount rate by a half point, following similar moves by Belgium, France, West Germany, and Holland. Paul?
Prices on Wall Street opened in nicely higher ground this morning, partly because still another day had dawned and the Federal Reserve had yet to announce the long-feared boost in the discount rate. Actually, some analysts expressed doubt that the Fed would take action in light of today's report of just that modest 0.3% rise in November producer prices. That, along with considerable buying linked to today's expiration of quarterly stock index futures and options, lifted the Dow Industrial Average to almost a 7.5-point gain at 10 a.m. in the wake of yesterday's loss of 1.25 points, while advancing issues took a 5-3 lead over losers. Over the midday hours, the market held its early gains quite well, thanks to the combination of a steady dollar, surprisingly firm bond prices, and continued weakness in the precious metals. At 1 p.m., the Dow was still up nearly 6 points, and gainers had widened their lead over losers to an 8-5 margin. The market moved higher in mid-afternoon with volume running some 50 million shares ahead of yesterday's pace because of the triple witching winding down action, which continued to favor the buy side. At 3 p.m., the industrial average was sporting a 12.5-point gain with 9 stocks higher for every 5 lower. In the final hour, the market continued to benefit from the upward pressure of last-minute futures and options strategies, and the Dow Industrial Average moved to a closing gain of 17.71 at 2,150.71. For the week overall, the Dow was up 7.22 points, and it currently stands only 33 points below the October 21st high of the year. Theoretical high today, 21.55 even, the low down around 21.31. Trading volume today, look at that increase of nearly 60 million shares because of the triple witching, and the up volume just swamped down volume, no comparison. Transports did well, up 6.19. Actually, for the week, the transports did better than the industrials. Transports up 9.65 on the week. Utilities gained nicely, up 1.13. The Dow 65 gained just over 6 points, and the closing took a fairly strong plus 578. Standard & Poor's 500 gained just over 2 points, almost a 2.5-point rise in the 400. The 100 up a little over 1.25 points. The Commodity Research Bureau March Index gained 1.5 points exactly. New York Stock Exchange Index rising nearly a point. Value line up just over 2 points, and the Wilshire 5000 gained just about 18.25 points. The bond market had a decent day, since that modest 0.3% increase in November producer prices was not disturbing, and a firm Fed funds rate was certainly preferable to a boost in the discount rate as far as traders were concerned. As a result, cautious buying was the feature of the day, which enabled tax-free and corporate issues to close with 1/8 and quarter-point gains, as did most of the longer-term governments. Long treasuries up 3/32. The Sherwin-Lehman Long Treasury Bond Index gained just over 3/4 of a point, and Fed funds were a bit high all throughout the day, closing nearly at 9%. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets, platinum again plunged the $25 daily limit as selling continued in response to Ford's announcement of a replacement for the metal in auto emission systems. Gold and silver edged up from yesterday's losses. The dollar moved higher in thin trading, despite the lack of a hike in the U.S. discount rates. The pound held steady against the greenback. And oil prices were mixed, with crude up 37 cents a barrel in New York and down a sharp 75 cents a barrel in London.
Pillsbury was 0 for 2 today in court battles to block a $63 a share hostile takeover offer from Britain's Grand Metropolitan. In a decision handed down late this afternoon, a Delaware court blocked Pillsbury from using its poison pill defenses. That followed an earlier ruling by a Minnesota judge temporarily blocking Pillsbury from going through with another defensive measure, the planned spin-off of its Burger King subsidiary. Although some believe the way is now clear for Grand Met to proceed with its tender offer, analyst Anton Brenner thinks a deal is still unlikely without the target firm's cooperation.
If Pillsbury is prevented from exercising its poison pill, this will still have to be a friendly deal if the acquisition is to be consummated. Otherwise, under Delaware law, Grand Met's hands are tied, and it would be difficult to combine the two companies. So I think we're still talking about a price having to be negotiated that Pillsbury agrees to.
The Grand Met tender offer is scheduled to close on December 23rd, and so far 87% of Pillsbury stockholders have tendered their shares to Grand Met. Pillsbury has not yet indicated whether it plans to appeal today's rulings.
Reuters quotes sources close to the Drexel Burnham Labert brokerage as saying that 2 of the firm's top executives are threatening to quit if the company agrees to a plea bargain that would pit the company against its junk bond director, Michael Milken. At issue is a proposed settlement with the government to settle expected securities fraud charges against the firm, which reportedly calls for it to cooperate in a separate case against Milken. The 2 executives who have reportedly threatened to resign, Leon Black and Peter Ackerman, did not return phone calls.
Federal Express, the overnight delivery company, is about to put a tiger into its tank. Federal today said it agreed to buy Tiger International, the parent of the Flying Tigers air cargo line, for $800 million. If the U.S. Departments of Justice and Transportation approve that deal, Tiger's shareholders will receive $20.85 a share, and Federal will pick up Tiger's international routes, cargo fleet, and airport facilities. Paul, it sounds like there were some tigers on Wall Street today.
Well, the market went out like a lion. That's good enough. Let's have a look at the closing Dow again. Closed right near its best level of the day, up 17.71 and up nearly 7 1/4 points for the week overall. The advanced decline ratio very strong, 10-4 in favor of winners, and an absolute tie between new highs and lows for the year at 29 each. Topping the active list on 8.5 million shares, Inco Limited trading ex-dividend, that special $10 dividend. Of course, it closed yesterday at 33 1/4, but taking that into account, the stock was actually up 1 3/8. Then we see Tiger International responding to Federal Express's 20 7/8 buyout bid, up 2.5. Exxon gained 1/2 point. American Telephone edged up 1/8. RJR Nabisco down 3/4. General Electric gained 1/4. So did IBM. Interco, when issued, that's the recapitalized stock, up 1/4. Ford moved down 1/4. 10th in big board volume. Niagara Mohawk Power off 1/8. Digital equipment did well. High-techs were fairly good today, up 2 1/8 there. Dow Chemical up 1 full point. The company says 88 earnings will be better than $12.58 a share. That's way up from last year's $6.47. DuPont moved up 2 3/4. Rumors on the street this morning that the company planned to sell its Conoco oil unit, but the spokesman this afternoon said it has no plans to sell any significant part of it. Federal Express down 1/2 point on news that it's going to have to come up with $880 million to buy Tiger International. General Motors gained 1/2 today. Then United Airlines down 1 point. Union Pacific was strong in the transport sector, up 1 1/8. Grumman Corporation, the star of the day, rising 5 points on news that Vernitron will bid $20 cash on a takeover. However, I understand Grumman executives are dead set against that. Universal Foods gained 1 1/4 on news that High Voltage Engineering will sweeten its buyout bid from $30.50 to $35 a share. Caesar's World moving up 2 5/8, and Golden Nugget up 1 point. Late today, Golden Nugget officials confirmed rumors on the street that the firm had purchased a 6.4% interest in Caesar's World. Dow Corporation, an electronics firm, up 1 1/8. No specific news we could find to account for that strength. General Signal lost a point. The company said that its Dutch tender auction for about 9 million shares was oversubscribed. The price will be between 44 and 51, and the proration rate only about 88%. Over the American exchange, a gain of 3.06 in the index today, but for the week overall, it lost 0.24. Trading volume pretty heavy, almost 13 million shares today, about 3 stocks up for every 2 down, a little better than that, actually. Magma Copper led the active list, moving up 1/8 on just over 1 million shares. There were positive comments in the Herd on the Street column about copper stocks in today's Wall Street Journal. Wang-B moved up 1/2, Amdahl up 3/8. Global Ocean Carriers down 5/8. It was an initial public offering today, offered at $15. 4.5 million shares moved down from there. Echo Bay Mines moved up 1/2. Bush Industries up 1 point. Favorable comments about it in today's Wall Street Journal. And Direct Action Marketing moved up 3/8 of a point. Now, the company's already received a $4 share buyout bid from Equitex, and today Meadow Group said it'll buy 26% of the stock at 4.5. NASDAQ trading a gain of 2.79 in the index today. For the week overall, it was up only 0.60. Trading volume up to 133.1 million shares, though. About 12 stocks up for every 8 down. The 100 index gained just over 4 3/4 points. Lynn Broadcasting moved up 3 7/8. Rumors on the street that Macaw Cellular and Telecommunications Corporation were interested in maybe taking over, but late in the day, telecommunications said those rumors are untrue. Apple Computer moved up 5/8. Intel a 3/8 point gain. Nike edged up 1/8. MCI a 7/8 point rise. Telecommunications A was down 1/8. Sun Microsystem moved up 1 1/8. Intergraph up 3/4. Puritan Bennett tumbling 4 1/8 points. The company said 88 earnings will be higher than 87, but the fourth quarter earnings will not be as good as the street expects. Finally, U.S. Trust showed no change. Newport Electronics moved up 2 3/8 points. The company is in talks with Sensor Control to sell out at $8 a share. Franklin Electric moved up 4.5 points. The company announced a recapitalization, which will include $25 cash to shareholders plus 1 new share of the new company. And AME moving up 1 5/8. A group led by the chairman has sweetened its buyout bid from $11.5 to $13.5. And that's our Wall Street wrap-up. Linda?
Well, Paul, the guessing is over as to who will be heading the Pentagon in the Bush administration. President-elect Bush today named John Tower as his defense secretary. And despite charges that the former Texas senator is too sympathetic to the military and lacks managerial experience, Bush expressed confidence that Tower will be able to make the Pentagon's procurement system more efficient.
I am impressed with his commitment to reform, and he knows what must be done, and I have great confidence that he will make sure that each taxpayer's dollar delivers as much as possible to our collective security.
Before today's nomination became official, the Defense Secretary-designate sat down with national correspondent Helen Whalen and discussed where he sees defense spending going in the next 4 years.
Will Mr. Bush's his promises of not raising taxes and the animosity in the campaign pretty much force the Bush administration into a confrontation with Congress over the defense budget, and we'll see huge cuts?
Well, why does it have to be over the defense budget? Because the defense budget is only about 28% of the total national budget. And over the last 3 years, defense spending has been going down in real terms, where many other non-defense programs, domestic spending programs, have been going up in real terms.
But isn't the reality of the situation that Congress is going to want to cut, and that there is probably going to have to be at least a zero growth defense budget or even lower than that?
With what Carlucci has already done with the 5-year defense plan, you're getting down pretty close to zero growth. It's probably growth of maybe 1 to 2% in real terms. But again, at some point you have to look at it and say, well, the threat has not diminished. Or perhaps the threat to our security increases. What are you going to do then? Continue to cut defense? Defense is not some luxury that you fund after you funded everything else.
Do you think that the cuts will come in the programs, the weaponry programs that are in the research and development phase and moving into the building phase, such as the stealth and aircraft carriers?
Well, you want to be careful about punishing research and development, because that's the wave of the future. We have to stay technologically ahead, and we have to apply high technology to new weapon systems to reduce the manpower intensity of those systems.
Is that what would be the emphasis in a Bush administration, to pretty much reduce manpower and increase those kinds of weapons?
Well, go to the least manpower intensive ones that you can. Obviously, there is an economy there, even though the front-end cost of the system may be greater. You don't just look at what the system costs you initially.
Should the Strategic Defense Initiative be built?
I think it should be. And I think we should deploy perhaps an accidental launch protective system as early as is feasible. It demonstrates to the Soviets that we mean business about defending ourselves. And they begin to see that then as threatening the viability and the efficacy of their huge intercontinental ballistic missile system. One thing they fear is our making that obsolete through SDI. Again, an incentive for them to negotiate arms reduction with us.
Thank you.
Defense cuts are leading Grumman Corporation to lay off nearly 1/10 of its workforce next year. The New York-based aircraft maker says it will dismiss 1,800 workers by the end of January, with another 1,300 slated to leave through attrition by the end of next year. With one Navy contract already canceled, Grumman warns that it may have to make more severe reductions if production of 2 other defense aircraft models isn't included in the 1990 defense budget.
Coming up, tonight's Market Monitor, Gottfried Heller, president of Fiduka Investments.
Well, despite a major union organizing effort, workers at the Adolf Coors company have soundly rejected a plan to unionize the brewery. By a better than 2-to-1 margin, employees nixed joining the Teamsters Union, which Coors says indicates that good working relationship that the company has with its non-union workforce. Under the terms of the election agreement, the Teamsters can't return to organize at Coors for 1 year.
The chief executive officer of Harcourt Brace Jovanovich, William Jovanovich, is stepping down at the end of the year after 34 years as the head of the textbook publisher. The company didn't give any reason for the change, but said President Ralph Kahn will take over as the CEO's responsibilities, while Jovanovich will remain as chairman of the board. Harcourt Brace has been struggling under a heavy debt burden after fighting off a takeover attempt last year by British publisher Robert Maxwell.
The Mexican finance minister today submitted a $108 billion 1989 budget to that nation's Congress, with over half of it devoted to servicing foreign and domestic debts. The budget follows President Salinas de Gortari's announcement of a new economic plan, calling for a series of currency devaluations in the next 6 months to try to reduce inflation to an annual rate of 18%. The U.S. Treasury Department says those devaluations will in no way affect the proposed $3.5 billion loan offered by the U.S. to Mexico until additional funds can be negotiated from the International Monetary Fund.
My guest market monitor this week is Mr. Gottfried Heller, president of Fiduka Investments, based in Munich, Germany, and it's one of the oldest and largest investment management firms in Europe. And welcome back to the Nightly Business Report, Jeff.
Thank you, Paul. Nice to be back.
You know, we're hearing on this side of the pond, so to speak, that the European markets look very attractive, but the U.S. market isn't particularly attractive at this stage. What's the view from that side to this side?
Well, we think that the market in the American market looks very good. Some European markets also look good. We are invested in German stocks, in some Swiss stocks, in some. We are now just starting to buy some British stocks. But we are still invested and are still investing. We are up to about 30% in American stocks and some Canadian.
So you see some attractive situations here.
Of course, yes.
The last time you were with us was on February 10th of this year. The Dow stood at 1962. We're nearly 200 points above that. We saw a lot of bearishness on this side. The analysts in New York, a little bearish. And you were very bullish. You gave us some great stocks to buy: Sears Roebuck, General Motors, IBM, Elcan Aluminum, Georgia Pacific, Solomon, Amundsen. They're all higher. And are you still buying?
We are still buying, yes. We recently bought some Navistar. We bought some General Electric. We bought some digital equipment.
But we're about to due for a recession, as according to the economic theory. Why invest in stocks prior to a recession?
Well, the recession always follows if there have some crimes been committed before. That means if some inflationary pressure has been building up, and that has to be corrected by higher interest rates. But I don't see that a lot of inflationary pressure has built up. Therefore, the crime having been minor, the punishment can be minor.
Well, that's a good theory. As a matter of fact, just prior to the crash, you were with us, and you said you did see some major crimes building up, speculative excesses, and you were very low in your U.S. investments, and so you avoided the crash in large measure.
We didn't completely avoid it. I would be a liar if I said that, but we were about down to 50–55% in stocks, and we had the rest in bonds and cash. So right after the crash, the day of the crash, and the days after, we were quite heavy buyers of American stocks.
So in any case, even now, you don't really see the threat of inflationary pressures and downward pressure on corporate earnings?
No, I don't. The inflation of the past, of the 70s, has been created in the first place by a huge credit expansion to the developing countries like to South America and so on. All these loans that have been given out in those years are nearly in default and so on. So therefore, all these smart bankers having given out these loans are now anxious to get back their money they lent in the 70s. They are not giving new money, and this is one of the main inflationary engines which has been stopped.
What is your outlook for the dollar?
The outlook for the dollar is neutral at the present. I think that it is not in the interest of this country anymore, contrary to the opinion of some professors up in Boston, to have the dollar lower. It's in the interest of this country to have the dollar stabilized for foreign investors as well as for business. And therefore, I think it will be fluctuating within narrower bands from now on, but later on, I think it will be higher.
Any particular stocks, American stocks, or groups of stocks you like right now? We only have about 20 seconds left.
Well, as I said, we have been buying General Electric, we have been buying Digital Equipment, Navistar. We still buy some interest-sensitive stocks like Cigna, Aetna, Salomon, Merrill Lynch.
So you're still bullish on America?
Of course. We also bought some bonds. Before I left Munich, we bought some bonds. Medium-range bonds, American.
Very good. Jeff, thanks very much for being with us.
Thank you for inviting me.
My guest market monitor, Gottfried Heller of Fiduka Investments.
In tonight's commentary, Alfred Kahn, Cornell University professor of political economy, says a forthcoming tax surcharge for Medicare recipients has its positive aspects.
We're already beginning to hear cries of outrage from our senior citizens as they discover that the expanded coverage under Medicare of the costs of catastrophic illness enacted this year finances the program in part by a hefty 15% addition to their income taxes, up to a ceiling of $1,600 for married couples next year and a higher one thereafter. Looking only at this program, the outrage seems justified. But considered in broader context, I think the new tax is fair. Setting aside the whole issue of the merits of a mandatory Social Security system, I don't see how there can be any objection to making each beneficiary pay the full actuarial costs of providing him or her with this expanded coverage, so long as they can afford to do so. And the income tax premium may be a reasonable way of doing that. But the surtaxes are intended to do more than that. They're intended to bring in enough revenue to make the entire new program self-sustaining. That's another way of saying that they impose only on people over 65 not just the cost of their own individual expanded insurance, but the entire burden of protecting the other seniors who can't afford to pay those costs themselves. Regarded in isolation, I don't see any logic in raising the requisite subsidy exclusively from old people. Like other welfare programs, it ought to be financed out of general revenues, whether by sales taxes or by a surtax, a much smaller one, obviously, on the incomes of taxpayers of all ages. On the other hand, the previous Medicare benefits were and are heavily subsidized out of general revenues. And the present substantial exemption of Social Security benefits from income taxes makes no sense, either in economic terms or in terms of fairly distributing the burden of reducing the federal budget deficit. Retirees today will be getting back in present value several times the dollars that they and their employers originally put in, even after crediting them with interest on those payments. And they get it regardless of need. So putting on them the entire burden of subsidizing catastrophic insurance for their needier contemporaries constitutes an only partially offsetting irrationality. We older folk have no legitimate complaint. I'm Alfred Kahn.
Recapping tonight's top stories, producer prices go up by 0.3% in November, but that isn't seen as indicating a resurgence of inflation.
There's some welcome inflation in prices on Wall Street as the Dow Jones Industrial Average rises almost 17.75 points to end at 2,150.71.
And looking ahead to Monday, we'll announce the NBR Person of the Year for 1988, the person who had the biggest effect, for good or for bad, on the economy. Now with tonight's last word, here's Paul.
Public officials have to be very careful about what they say, and that's illustrated by this report from London concerning the resignation of Great Britain's Assistant Health Minister. What prompted the resignation was a statement by the official saying that most of Britain's eggs were contaminated with salmonella bacteria. Well, that set off a panic among the nation's consumers, leading to a 50% drop-off in egg sales and causing the government to announce that it would scramble to buy millions of unsold eggs to help relieve farmers. And I think it's obvious the official left with more than a little egg on her face. She's probably just a shell of her former self.
What a hard-boiled statement that is, Paul. That's it for this edition of the Nightly Business Report for Friday, December 16th.
For all of us, good night.
The Nightly Business Report is made possible by A.G. Edwards, providing financial services through more than 340 locations. A.G. Edwards, a century-old tradition of putting the customer first. By Kidder Peabody, one of the world's leading investment firms. And GE Capital, providing business with comprehensive financing. Two companies of GE Financial Services. By Digital Equipment Corporation, offering computer solutions that work together the way people work, sharing information throughout your enterprise. And by contributors to public television. Reuters, the world's largest electronic publisher, provides the Nightly Business Report with news, market data, and communication services worldwide. For a transcript of this program, please send $4 check or money order to NBR Transcripts, WPBT, P.O. Box 2, Miami, Florida 33261-0002. Please include the date of the broadcast.
Sun Company, a leader in developing energy for America and a manufacturer of Sunoco products, makes possible in part TV12's broadcast of this program. Where there's sun, there's energy. The Seltzer Organization, a full-service real estate company which has been providing corporate America with office facilities for more than 30 years, is pleased to help bring you the Nightly Business Report on TV12.